Thank you everyone for coming and for going through the technology of getting in here, but we have our challenges, but we're able to overcome them. So thank you for coming to the event called How to Buy a Home with No Down Payments. Everything you need to know to start your journey. My name is Vanda Crossley. I am with eXp Realty, and I'm also a loan originator with Easy Home Loan. Also on this webinar, we have Regina Webb. She's with B-Web Home Solutions. She's a credit consultant. We have Angela Austin. She's a home inspector. And Heron Burrows, he's not here yet, but hopefully he'll get in. He's going to talk about why you need to protect your home. He's with Ethier Insurance. And it takes a village to buy a home. We all need each other. We can't buy a home by ourselves. In addition to your inspector, your insurance, getting your credit together, needing a lender, needing a realtor, you also need an appraiser, you need a title company, you need a CPA and a tax person, you need family and friend support. It takes a village to buy a home. So a little bit about me, I was a college professor at DeVry University, and I fell in love with education. Before that, I was in healthcare, working in medical records, healthcare administration. So I was doing consulting with that, which was kind of teaching, and then I got my degree and went on to teach professionally. And then I got laid off in 2015 once I relocated from Chicago down to Houston. So when we did that, I started getting into real estate, fell in love with real estate. So now I'm doing my teaching in real estate. Somebody needs to go on mute. I'm not sure who that is. Okay, I think I muted you. That was you, Cynthia. But that's okay. So that's a little bit about me. I have 3 grown children, 2 live with me, a granddaughter lives with me, is 14, and my 84-year-old mother-in-law. So we have a blended multi-generational family here in Katy, Texas, and we love it. So it's a little bit about me. I also believe these are the 3 pillars that you need for life. You need health, wealth, and relationships. This is all that businesses strive to succeed and to solve a problem in. So everybody wants to be healthy. We want to live long. We want to eat right. We need to exercise. And we also need to live. We need to pay for the food. So we need some wealth. I'm not saying you got to be a multimillionaire, but you got to be able to have a place to live, a roof over your head, a nice environment. You need money to eat. You may want to travel a little bit. You need clothes, you need water, all that takes money. And then relationships. Nobody wants to live by themselves. You want to have love in your life. You want to have people around you. I'm a social person. Those of you that know me know I do like to put on social events and have gatherings at least once a month. So that's real important to me. And we all want the American dream. So these are different American dreams. Everybody's dream is different. Some people may want to live in a tiny home out in the woods somewhere, which I'm not opposed to that personally. We all had the dream of having a house with a white picket fence, so that might be your journey. You may want multi investment properties where you have 2, 3, together, 2 flats, 3 flats, what they call them up north. And you may want to live in a nice, home with a big lake and a, sprawling yard and all that. So everybody's dream is different. But what the home represents is financial stability. Buying a home, you're independent. You're not really dependent on your landlord anymore. You can do what you want to with your house. You establish roots. You can grow a garden. You can raise some chickens. We know how much eggs are now. In some places, you're in an apartment, you can't have any chickens. You also can build a sense of community. You have people around you. Now down here is a little different from up north because I kind of knew some of my neighbors, but here people kind of drive into their garage and you may not know your neighbors. But you can have a community of people within your church or within the health club that you go to, something like that. And then it helps to build wealth through appreciation of property values. One of the ways that people get rich or make a lot of money here in the United States is through property value appreciation. So my journey is to help you with the wealth part, and to try to teach you a little bit about staying healthy. So if you're renting versus buying, this is kind of what you pay in rent yearly. If your rent is $1,500 a month, you pay it a year, that's $18,000 a year. You pay $2,500 in rent, that's $30,000 a year. And if you pay $3,000, that's $36,000 a year that you're giving to your landlord to help pay the mortgage on that property. Some places in the United States, like New York and California, we know their rents are a lot higher than this, but this is kind of the average rent here down in Texas. So you're basically throwing all your money out the window, you're building no equity, you're paying 100% interest, and you're helping your landlords pay off their mortgage. And it can go up every month, and it's expensive to move. If you keep renting and renting and moving, you know, that eats into your money. So renting or buying a home is not for everyone. If you're someone who's going to be moving around every few years, then maybe you don't want to buy a home. You just want to be a renter because you have the freedom to move around. I still encourage people to become a homeowner because you don't have to live in that house. You can rent it out and use it as a asset. But if you're unsure about where you want to live in the city, Houston is huge. You don't want to buy a house way in Baytown and then realize your job is going to be out here in Katy. You may not want to do that. So you may want to rent when you're relocating just to kind of get your bearings and see where you want to be. And there is an expense with buying. So when you're renting, of course, you call the landlord, or you call the property manager, you tell them something broke, they come and fix it. When you own a home, you're responsible for all the repairs and the renovations. Earl Nightingale says, never give up on a dream just because of the time it would take to accomplishment it. The time will pass anyway. So if you say, well, I'll do it in 5 years, 5 years is going to pass and you're still not going to be where you want to be. So one of the things with buying is we always educate you to have a reserve because eventually everything is going to fail. The water heater is going to go out. The roof is going to get old. The furnace is going to break. The foundation is going to crack. Electricity is going to need updating. But that's still not a reason not to buy. It's just something that you have to be prepared for. They say save for a rainy day. So this is one of the things is, you know, if it's raining, you got a roof that's leaking, you're going to need to repair that. So the next, I want to talk about credit. I'm going to have Regina to do her presentation on credit report, but we try to strive for at least 700 plus to get the best mortgage rate. If your credit score is below 700, it's not saying you can't get a home or a mortgage, but your interest rate is going to be higher. So Regina, go ahead and introduce yourself, and let me see if I can pull your presentation up.
Is it possible for me to share my screen?
Sure. I did make it so you can.
Okay, perfect. I think you have to unshare. Or no. Let's see.
I've got multiple participants can share simultaneously, so you should be able to share.
Can you see my screen?
No. Let's see. No.
Let me stop sharing. Okay. Can you unshare maybe for a second and then let me try to share it again?
Okay. Okay, now try.
Now can you see my screen?
Yes, ma'am.
Okay, perfect. Hello, everybody. My name is Regina Webb. I am a consultant with credit repair. But before I get all into that, I do want to introduce myself so that we can be more acquainted with each other. Again, my name is Regina Webb. I have been in the credit repair space for almost 5 years. So I would say financial literacy space. Before being in the financial literacy space, I was a person that needed help. I was struggling. I couldn't get anything in my name. And from there, I found the financial literacy space. So for me, getting my credit turned around and being able to go in the bank and they tell me, hey, we can help you, was revolutionary for me. I don't know about you all, but for me, my credit was destroyed right out of high school, going through college, getting the free credit cards, free t-shirt, and getting a credit card, not knowing really what it was, what I could do with it and how to handle it. And so walking in ignorance with credit, I found myself destroying my credit very early. So most of my life, I suffered the consequences of my choices. And so being able to finally get on the other side of that and realizing the power that I had with excellent credit, I've been on a mission to help other people get free. I call myself a slash between Moses and Harriet Tubman. I'm free, now let us get us free. So I love to help people become free from the bondage and the weight of poor credit and what it can cause you, the havoc that it can cause you. So for me, credit repair is more than just fixing your credit. You have to connect it with financial literacy. If you do not educate yourself, people get their credit fixed all the time. But if they haven't changed their understanding or their mindset about credit, what happens is they'll find themselves in the same situation. So my goal is not only to help you with your credit, but also to help you enlighten you so that you won't find yourself in need of credit repair ever again. So again, your dream home begins with a strong credit score. Again, my name is Regina Webb. I'm a credit consultant. And so let's get started here. Sorry. There we go. All right, what do you need to qualify? So there's mainly 3 types of loans out there. There's VA, which requires a minimum credit score of 580. There is USDA that requires a minimum credit score of 640. And then there's FHA, which is a minimum credit score of 580. And then you also have conventional, a minimum credit score of 620. Now, I'm going to echo Vanda, what you just spoke a minute ago. Although there are minimum credit requirements to qualify for a loan, a minimum credit score can be costly. So my goal is not only to help you to qualify for your loan, but to have the best interest rates possible. So let's talk a little bit about how your credit is determined. A lot of people don't know how it's determined. And so it is, I say it's a credit game, okay? You have to know how to win the game. So a part of the credit game is this. You have 5 different ways that your credit is determined. The largest way that your credit is determined is 35% of your credit. So that is your payment history. That's 192.5 points of the 850 that you're allotted. Now, the second largest way that your credit is determined is credit utilization. How much of your credit are you using versus what you have been given? So that is 165 points. That's 30% of how your credit is determined. And then you have credit age. How long have you had credit? That's 15%. That's 82.5% of the 850 points that you get. I'm sorry, 82.5 points, excuse me, of the 850 points that you have. And then you have inquiries. You want to keep it around 2 to 3 every 2 years. They do fall off after 2 years. That is 55 points. So if you've got a lot of inquiries, that could cost you part of your 55 points that you're allotted to get to excellent credit. And then credit mix. You definitely want a variety. You don't want all loans and no credit cards, and you don't want all credit cards and no loans. So I'll talk a little bit more about that. So let me emphasize one thing that is very, very important. Let's talk about tips to improve your credit score. Credit tip number one, if you got a pen and paper and you write this down, pay your bills on time. This is the biggest tip that I can give you. And now that you know how your credit is determined and calculated, let's talk about the largest component. This is so very important, you guys. So again, that largest component is your payment history. That's 35. The largest piece of that pie of how your credit is determined, 900 and, I'm sorry, I don't know why I keep saying 900, 192.5 points, okay? So let me help you to understand, depending on what you're late on, one late payment can drop your credit score upwards to 100 points. It could be catastrophic for your credit score. Now, here's some good news. If you already experienced this, the pain of a late payment, we can still help you clear that up. Now, tips on improving your credit score. Number one, hire a professional. When you dispute online or over the phone, you forgo your legal right to what's called arbitration, and you lose your benefit of a paper trail. So arbitration is to be able to come back. If they say, hey, no, this is legit, this is yours, you still, if you do it via paper, still have that right to dispute as many times as you want to. And there's hundreds of different ways to dispute out there. So you don't want to dispute. Another thing with dealing with a professional, you don't want to dispute the wrong things. Sometimes disputing the wrong things could cost you 10 to 20 points. And then also professionals know and understand the right way to create dispute letters, what your credit profile and your credit comment should look like prior to applying for a mortgage. Sorry. So why should we avoid bankruptcy? I deal with a lot of people, and it's amazing to me how much an option to fix their credit is just to do a bankruptcy. It's quite fascinating, but let me give you the truth about a bankruptcy. A bankruptcy, depending on can last you 7 to 10 years on your credit unless you do credit repair. You can buy a home with a Chapter 13. However, you must show proof of a steady income, plus meet minimum credit score requirements. Buying a car after bankruptcy is doable, but a huge but here, the interest rates will be high. If you, or for any reason, can't make your agreed payment for Chapter 13, your bankruptcy is voided. Your assets are no longer protected, your house, your car, your business, and so forth. Repo foreclosures are possible now. And also, you must refile Chapter 13 to protect yourself again. Now, something people don't realize, especially if they haven't done a bankruptcy and they're making it an option, a bankruptcy can drop your score potentially 130 to 220 points, depending on where your score is. And so your bankruptcy should be your last resort, and don't use them often. I have people that's their go-to thing. I don't get it. Anyway, most people file bankruptcy still need credit repair because the negative impact of bankruptcy. Lastly, bankruptcy is not credit repair. Let me repeat that. Bankruptcy is not credit repair. So I get people ask me all kinds of questions. And one of the most often questions I get is, I paid off my account and they're still reporting. Why is this? Well, paying off an account does not automatically remove them from your credit. So it actually, what it does is restart the clock to when it's supposed to fall off. And I emphasize supposed to, because I've seen people going back to bankruptcy that's supposed to fall off 7 to 10 years. I've seen people have bankruptcies that's been on their credit for 20 years. This is why we advise you to speak to us before you pay off all accounts. This is actually hurting you rather than helping you, and you have the legal right. The law is on your side because the credit bureaus are privately owned entities, and we do have laws to protect you as a consumer to be able to dispute old accounts, those collections, those charge-offs, all of those old accounts. Now, let's talk about how to build your credit. So
Hey, Virginia, before you go on, do people that keep filing bankruptcy, they're not trying to buy a home, right? They're just trying to continue to rent, or they have aspirations of buying a home?
Well, everybody's goal is different. I've had people that want to buy a home and have bankruptcies, 2 and 3 bankruptcies on their credit. But everybody's goal is different. So I really can't say, yes, that's their goal or no. It can be.
Yeah,
It can be.
and things change along the way too. Yeah.
Absolutely. And so how can I build my credit? I'm going to give you some things that you can help build your credit. First of all, there are 2 types of ways to build your credit. There's installment, and we talked about this with having that mixture. There's installment and there's revolving credit. Installment credit is like loans that you make fixed payments over a set period of time. So some examples are your car payment, your mortgage, and things of that nature. Now, let me tell you this, if you're currently renting, having your rental history reported to all 3 bureaus, because we know if we rent, we paying our rent on time because we don't want to get put out. So that's one bill that we are paying on time. So why not have it reported to the credit bureaus in order to build your credit score? So doing so could boost your credit score potentially 28 to 150 points. We have access to a service that can help you build your credit score. Also, revolving credit is credit that is automatically renewed as debts are paid off. So a good example is of that is credit cards. And I also can help refer you to some credit cards depending on your score. I can refer you to secured credit cards if you're just trying to get started, get going. And then I also can refer you to other credit cards, higher credit cards, depending on your score. But let me tell you this, people are afraid of credit cards. And the truth of the matter is because they don't know how to use them, number one, and they really don't know the power that a credit card can have with their credit. Do understand that a credit card is one of the most impactful ways. There are 5 different ways that your credit is determined. A credit card every single month impacts every one of those ways. Now, let's talk about credit tips for the long-term success. Number 1, limit your amount of credit that you apply for. Each time you apply for a new loan or a new credit card, your score will drop a bit, right? And this is because it's been statistically proven that those who acquire more credit are considered bigger lender risks, okay? Establishing a good mix of credit. I've already talked about that. You don't want to have one and the other. You want to have a good mix in there. And then consider, if you don't have any credit cards, consider starting off, if you just jump starting your credit, becoming an authorized user. If you have a spouse or relative that has excellent credit, I do want to emphasize that, have excellent credit. Ask to be added as an authorized user on one or more of their accounts. This should never be done as a short-term fix. You should be still on the process of getting your stuff together to obtain a loan, but should be used as a long-term strategy to help you rebuild your credit. A word of caution, though, be very careful who you choose to become an authorized user with, because if they make a late payment or default on a loan, it would appear on your credit report, hurting your credit even more, okay? Now, how can we help you? This is how we can help you. And I know I'm going fast because I have a short period of time. So Vanda's recording it. Thank you, Vanda. And we can always go back and get this information, but I do apologize. I just want to be respectful of my time. So what we do is—
Take your time. Take your time. Okay.
What we do is we do the heavy lifting for you. At B-Web Solutions, we do the heavy lifting for you, okay? We leverage the Fair Credit Reporting Act, which was passed by Congress to prevent credit bureaus from intruding on your personal lives, okay? Based on that, we are able to dispute any negative, duplicate, erroneous, or obsolete item on your credit report. Bankruptcies, tax liens, repossessions, foreclosures, student loans, medical bills, collections, charge-offs. Do understand, it really doesn't matter what the negative item is. It can be disputed to be removed. So a little bit about our process. Our process is pretty simple. We will dispute all negative items to be deleted upon reflection or be reflected as paid as agreed. We will pull your credit. We'll perform a detailed analysis of your credit profile. You will receive this detailed analysis of your credit profile. Then we will, from there, begin to dispute the negative items on your credit report, all three bureaus at the same time, creating a quicker turnaround. Some of my bigger competitors, what they do is they dispute 2 and 3 items at a time, one bureau at a time, causing you your credit success to be on a long haul journey. Well, that's not necessary. We don't do it that way because our goal is your goal, and that's to get you in your home as quickly as possible. And that's why we do all 3 bureaus, every negative item, all at the same time, because our goal is to get you your results as quickly as possible. So customers typically start seeing results with us in about 30 to 45 days. You will also get your own customer portal. You will know that we're doing our homework. And the process, you will be able to track your process and your progress every step of the way. Now, our services also include you will receive credit builder resources, 3 monthly bureaus, 3 credit scores from all 3 bureaus each month. You will also receive daily credit monitoring. You will receive texts and emails and credit monitoring alerts. You will receive credit score tracker, credit score builder and planner, a credit score master simulator, identity monitoring or identity protection, and then also 1 million in identity fraud insurance. Now, you also receive, I mentioned this when I first introduced myself, the importance of credit financial literacy. So a part of your journey, it is my mission to make sure that you receive credit education along with your restoration. Now, please note that we help customers by offering the feature details above, in addition to helping customers analyze their credit reports, provide education on what they could do to potentially improve their credit, and offer a complimentary document service with an active subscription. The enrollment, and I have to say, because part of the law requires me to say, the enrollment in the services does not guarantee certain results. Now, here's a little bonus when it comes to becoming a homeowner and buying your home with no money down, as Vanda is showing us. So here are 5 steps to save for a home. Decide your budget. Prior to, so if you're paying rent, she gave some rent examples. If you're paying rent $1,500, but you want a nicer home and you're expecting your mortgage to go up to $2,200, I would say prior to even looking at a home, 1, decide what amount you can afford. That's number 1. Pay down your debts. The general rule of thumb is a house is usually about 1/3 of your income. Then pay your future mortgage. So if your rent again is $1,500, and then if your rent is $1,500 and you're expecting that your new mortgage will be $2,200, $2,500, take that extra money and begin to put it in a savings, practicing having to pay the $2,200 and $2,500 every single month, getting used to your mortgage. And that would be that good savings that Vanda talked about you needing when things begin to break down in your home. You'll be already prepared. And so pay yourself first. That's another thing. Reduce your expenses. You want to reduce your expenses because you're about to increase into a mortgage. It is very important to have a debt repayment plan, as DTI affects how much of home that you qualify for. So you want to make sure you get those debts paid down. And when you establish a budgeting plan, part of your budgeting should allocate money towards debts and savings. Now, I bought my home, now what? I do know that we have somebody coming from Goosehead as well, but also another part of protecting your home is protecting your assets. Do you all know that 60% of Americans lack a will, lack estate planning? Do you understand that? So give your family the gift of peace during the time of the unexpected. Every homeowner should have their life, their legacy, their insurances, their most important assets are all protected by a will, trust, and a medical and financial power of attorney. Contact me if you want to learn more of how to do that. So fulfilling your dream of home ownership starts with solid finances and a strong credit score. Let's get your keys. Now, my last slide, if you want to go ahead and jot this information down, is how you can contact me. We would love to talk with you and how we can help you achieve all of your credit goals. So my phone number is, again, Regina Webb, B-Webb Solutions. My number is 832-566-9207. My email address is Regina. Oh, I got to take that period out of there. No period before the at. Regina@bwebsolutions.com. And then my website is bwebcreditsolutions.com. I look forward to helping you and supporting you along your journey of home ownership. Vanda, again, thank you for this opportunity and your time. I really appreciate it.
Thank you. I appreciate your time as well. Great information. Anybody have any questions for Regina before she goes about her merry way today? But what everybody came for is how to get this free money, how to get this no money down home. So there are grants, there's free money out there. We just have to go and get it. It's going to take some research on your part as well. Now, we as realtors, we do know about a lot of different programs, but you'd be amazed at some of the programs we just don't know about. And we're just not in the loop with everything. There are various nonprofits out there that have money out there for down payment assistance. Some start at the beginning of the year, then they run out of money the end of the year, and some of them vice versa. So they may not get started to the middle of the year and we may not know about it. But you know, Google is your friend. One of the people is NACA. Not sure what NACA stands for, but it's a homeownership nonprofit that helps people. They say there's no minimum score. They just want to look at your income and they tell you how much house you can get. Now, the process with them is pretty long and laborious. So they want to know, they look at your bank account every month. You have to take in your statements and they want to know, well, why did you go to Starbucks every day for the last month? You know, that's money you could have been saving. Go to, you know, make your own coffee, make your own latte at home. So they'll teach you ways to save money. You want to be a homeowner. So I'm gonna put you on mute, Angela.
Oh, sorry.
And then there's Hope, there's T-Shack, there's veterans. Veterans don't pay any money down. USDA, they pay no money down. USDA loans are in the rural area of the country. So I say we're in Katy. Parts of Katy is not USDA because of the population, but they're building so many new constructed houses way out in like Sunterra, in Katy and Waller County, that those homes do qualify for USDA. USDA is no money down. City of Houston has programs. They were giving up to $30,000. If you want to live in the city, and then you have to find the homes, some of the homes that qualify for that. But I think they ran out of money. But again, that's something Google to see when they're going to start that back up. There's a Hero Homebuyer Credit that we're familiar with, where whether you're a school teacher, a fireman, now they're doing transportation people in logistics, people in oil and gas. They're doing credit for that. So there's no, what's it called, closing costs associated with it. So those are good ways of getting free money. Section 8 vouchers. These are people that have Section 8 are actually eligible to buy a home. So they put you in a program for like a year. You have to show that you're, you know, able to buy, go through this training where you can buy a home. I haven't had anybody go through it yet, but I know that it's out there. Anybody have any experience with any of those programs they want to speak on? I've had experience with NACA. and USDA and TSHAC and City of Houston. Nicia, Chandra? No? Okay.
Yes, excuse me. I looked into NACA. You actually have to go to a home buyers little workshop that they give. It's pretty much all day. And as you said, it is lengthy and it is time. It is, yeah, but at the end of the day, I heard that it was worth it. So I don't know. We're gonna see.
And they do give you a better interest rate than most other people, but I had some people that go through it and they like, okay, this is taking too long. They're not giving me what I need. I'm ready to get in the house. Let's just go through somebody else. So, and they
Yeah.
will get you ready.
Yeah,
But
absolutely. Absolutely.
you have to be patient.
Yeah, we really do. Because it does take time. You have to go in and it's like 25 things that you have to upload and then they come back, you have to set up with a counselor. And so I did that and it took 30 days to meet with the counselor. So it's been a whirlwind, but yeah.
A lot of people get frustrated with that, but
Right.
if you want to be a homeowner, you got to jump through those hoops.
Yeah, okay.
Hi, Vanda, can you hear me?
Yes. I can hear you. I don't know who that was. Okay, but let's talk about the buyer's responsibility. So even though it's no down payment, you still are going to have to come to the money, come to the table with some funds. They want to see that you have money in the bank. What do you need money in the bank for? You need earnest money. Usually it's 1% of the purchase price. So if the house is $250,000, they want you to put down $2,500. If you get a new construction home, usually the deposits vary from, I've seen it as low as 1,000. I've seen it as much as 10,000, depending on the house and the builder. You want to put down an option fee. Option fee is between $10 and $50 a day. The average is about $200. There may be a 5-day option. And at that point is when you get the house inspected. So there's no option with the new construction. So with the inspections are usually $300 to $500, depending on the size of the home. And I'm going to let Angela talk a little bit more about that in a minute. And then if you want the pests inspected, or if you have a pool, there may be some more with that. And it's recommended even for new construction homes, because we know that they're hiring people. How can I put it? It's a lot of people working on these houses, and it's just too many for them to go and make sure that the work is done 100% with all of them. So we recommend inspection on even new construction. And then a survey. Survey is like the boundaries of the home. So that's between 250 and 400, depending on the size of the home. Sometimes it's not needed if the sellers already have a survey. And then there's a HOA resale certificate, which is about $350 on average. And then there's a title policy. You want to make sure once you buy this home that you're actually the legal owner, that it's not tied up in heirship. You want to make sure the person selling it has the legal right to sell it, because there's a lot of scams going on out there. And so we take everybody to the title company to transact that. And that can cost about $4,000. So if you want to know like your title costs, I recommend Patent Title. They have a great tool for estimating closing costs. Let's see. So your mortgage is going to consist of your principal, interest, taxes, and insurance. We call that the pity payment. Pity payment, yeah. So we can also show you how you can pay down on your principal so that you're not paying so much on a 30-year mortgage. Because if you look at the amortization of any loan at the end of 30 years, you have paid for this $200,000 house about $600,000, because at the beginning it's full of interest and you're not paying much on the principal. We can't control the taxes. We can't control the insurance. Well, Aaron, you might be able to control the insurance, but the principal you can. So we recommend you making 2 payments a month, split that 1 payment up into 2, or you make an extra payment a year, or put $50 toward the principal every month, however your budget tells you, allows you to do. But that way you're paying down your mortgage in fewer years than 30. You need to use a local lender. I've had an instance where a person was qualified to buy a home down here in Texas, but when we got ready to go to closing, they told her, we don't lend in Texas. She was coming from another state. Oh my God, can you imagine? So she ended up losing that house because they were trying to sell it. You know, they couldn't wait for her to get with another lender, but she got another place. So if you use a local lender, you know that they definitely can lend in Texas. Some other options are rent to own. If you can't rent right now, if you can't own right now, you can rent to own. And these are some companies that participate in that. Each one is unique, so you have to read the fine print on them. Some of them require a certain credit score. Some of them are only $4,000 down. And some of the payments go toward a down payment. So that's one way of forced savings. So there are some other options out there. And things that affect the mortgage rate, it depends on the type of the loan that you get. Your down payment, some of them require only 3.5% down. Some of them require 10% down. Loan amount, if you get a jumbo loan, of course, it's going to affect your mortgage rate versus a $200,000 home. Your loan term, there are 15-year mortgages, 30-year mortgages, and I've even heard them talk about 40-year mortgages to help more people be able to afford a home. Mortgage insurance, like in VA loans, there's no mortgage insurance. In FHA, there is mortgage insurance. So that's gonna make your rates go up. And then the population, the county where your property is located. If you're in Waller County, it's probably cheaper than being in Harris County. And of course, your credit score. And is this home gonna be your primary residence or is this an investment? So if it's your primary, it's going to be lower interest rate. If it's an investment, they're going to require higher interest rate and more down payment. So with down payment assistance, usually there's a minimum score of 620, and then they talk about the maximum DTI, and DTI is your debt to income ratio. So they look at your total debt, and then they look at your total monthly income to determine that eligibility. Property taxes usually go up annually. You're paying more in interest over the term of the loan when you get the down payment assistance. So a lot of people are looking for down payment assistance, but in the long run, they're actually going to be paying more. And then another loan product is FHA, which is a minimum credit score of 580. If it's more than 580, it's automatically 10% down. Lenders use the low of 500 for lower scores. Higher back-end ratios allowed, it's 54%, and it's just 3.5% down payment. I always say if you got more down payment, put that down if you can afford it. And then seller's concession. You may have heard of people saying, well, the seller can contribute to my closing. That's called a seller's concession, but the max is 6% of the loan amount. Let's see, it's for your primary residence only, and they do have stricter appraisal guidelines. Because if they get that house back, or if you don't pay, they want to make sure that house is a good investment for them as well. And they do have FHA renovation loans and down payment assistance. Okay. Some other products they have are conventional, VA, and then non-QM. Non-QM is basically bank statement loans. If you're a 1099, you're self-employed. And debt service coverage ratio, that's usually an investor product. So the company that I'm with, Easy Home Loans, we do all of these. And then if you're an individual tax identification number. If you don't have a social security number, that's for maybe some foreign nationals. So the first step in buying a home is to meet with your real estate professional. And that would be me or whoever invited you to this call. If you have another realtor that invited you, get pre-approved, get with a local mortgage company and get pre-approved. Search for homes in your category, in your whatever you can afford. And then you make an offer. When you make an offer and then you negotiate that contract, let's say they want to, you want to close in 2 months. They're like, no, we want to close in 1 month. So that's part of negotiating. They say they want you to put, you want to put 1% down. They may want you to put 2% down. See how serious you are. That's part of negotiating. And then you go into escrow, and then you final details, due diligence, you order the appraisal, conduct the inspection, review terms with your lender, and you also go over your insurance. So you want to make sure that that home is not in a flood zone that maybe you didn't know about, or they had a lot of things that happened. And I'll let Angela and Karen talk about those things. So Angela Austin, go ahead.
Hi, everybody. My name is Angela Austin, and I'm a home inspector, and I'm also a former home appraiser. And I just wanted to take a few minutes to go over the importance of why and when you need to hire a home inspector. How many of you would buy a car without ever test driving it? So why would you buy a house without having it thoroughly inspected? Because a house is more than likely one of the most expensive purchases you will ever make. So as we say in the business, don't purchase blindly. So what exactly is a home inspector? A home inspector, we are licensed by the state of Texas Real Estate Commission, and we provide both the homeowner and the buyer with an unbiased report of the property's condition, informing them of any health and safety issues and defects that may affect the value of the property. In other words, I work for you, the buyer, not the realtor, not the seller, the buyer. Now let's talk about when would you contact or hire a home inspector? Well, we believe that there are 4 occasions when it would be beneficial for you to hire a home inspector. Number 1, if you're building new construction, it is imperative to hire an inspector for what we call a 3-phase inspection process. As Vanda alluded earlier, today we have seen more defects in new construction homes just built than we've seen in existing homes. And I'll tell you why. You've got so many people working and shortage of workers. And now they're moving around where they used to be with one builder. Now those are moving around, taking whoever's paying them the most. So there's a shortage on qualified worker with skills. So literally some builders are driving past Home Depot and Lowe's going, hey, anybody know how to put up drywall? Okay, you're hired. And that shows in the quality, it's showing up in the quality of these brand new $500,000 plus homes with defects. So yes, that's why it's important to get it when you're doing a new construction home. A new phase inspection consists of, what we're looking for is foundation. We're going to inspect in phase 1, foundation and the slab. We want to make sure that it's poured properly, because if you have foundation problems, just like anything else, if the foundation isn't right, everything else is going to go wrong eventually. It may not show up right away, but eventually it's going to show up. It's going to show up sooner than later, especially if it's foundation issues. Another phase of the 3-phase inspection is after the house has been framed. We go back at that point and we inspect to make sure that it's framed properly. And then the next phase is after the wiring and the plumbing and the ductwork has been done. And lastly, even though this is an additional one, I always recommend and I'll always offer as a service to come back and do what we call another walkthrough right before the final walkthrough with the builder. So in other words, let us come back, do a thorough inspection right before you meet with the builder to do your final inspection. That way you've got a new list, fresh list of all the things that we found wrong with it that you can present to your builder before you close on that house. Another time that's beneficial to hire an inspector is before you buy a home. So let's say you've got your lender, you've got your approval letter, you've gone out with Vanda, and now you found your dream home. Right after the seller has accepted your offer is the time to hire a licensed home inspector. We will thoroughly inspect the home from the foundation to the roof and everything in between. We also recommend that you make sure that when that offer is written, it includes an option to cancel the contract if the inspector discovers something that it concerns you. So you've got an out. If we find an issue that concerns you or prevents you from wanting to buy that house, that clause alone will allow you to pull from the contract. So, another time when you want to hire an inspector is before your warranty expires on your home. So let's say your new home or your new or previously owned home came with a warranty, or maybe you even purchased it after you closed on the home. Consider getting a home inspection just before the warranty expires. The inspection will document any builder's defect or other issues while you are still covered under warranty. Make sure that you let the inspector know that you are requesting what we call end of warranty inspection, because that's may affect the price as well. It differs in the cost. It's not as expensive. And lastly, before you sell your home. Now, this is rare, but we in the business, many real estate professionals now are recommending that sellers obtain a home inspection before listing their homes, and I'll tell you why. This gives the seller the opportunity to address major repairs that could potentially delay or derail the sale of the home. Also, it allows them to perform repairs ahead of time, which might be cheaper for the seller versus negotiating it during the process of when you're putting in the offer. So a lot of times we can, as the seller, can repair it cheaper at that point. It's also important to note, however, that the state of Texas law requires that the seller to disclose any known material defects in the home. So you may need to disclose the result of the inspection to the potential buyers. So they can't sell a home knowing that it was once in a flood. It has to be disclosed. Some areas that an inspection consists of are scope. Well, as I said, from the foundation to the roof, anything interior, the grading, the level, the grass, the way the level of your soil, making sure that it's properly running off so that the moisture is running away from the house, not toward the house, because if it's running toward the house, it's going to create a foundation problem. So we want to make sure that everything is draining off properly. We're up in the attic. We're also doing any interior, walls, windows, plumbing, all that good stuff. Appliances, your HVAC system, your heating system, and your electrical system. We're touching every part of that house thoroughly to make sure everything is working properly and is in code. It's up to code. Some additional, what we call add-ons that don't normally come standard with a basic home inspection. And that would be like if you have a septic tank versus just a regular toilet system. A pool inspection is also extra, as well as termite inspection. There's a mold and lead inspection. There's also even an environmental soil and water testing inspection that can be done as well. Pretty much that's it. Anybody have any questions? All right, well, thank you.
What are the benefits of using a female inspector?
We're much more thorough than men. Men, I hate to say it, and I'm sorry for the gentleman that's on the on the call with us, but you know how we are. We're gonna list things that the average man might go, oh, that's just cosmetic. Well, and cosmetic things are important to me as a female inspector. I want my buyer to know that, yeah, there's a crack in the tile, even though most of the men inspectors that I have worked with would go, you know what, that's cosmetic. And technically we don't have to list that on the inspection report, but it's important for me to let the buyer know everything that's wrong with that house. But in my report, I'm gonna list what's important, what's safety, and what's cosmetic, so that you know, this isn't a big deal, but I need you to know that it's there.
Great, thank you.
Thank you.
Anybody else have any questions?
Well, thank you for your time.
Okay, thank you. And the other thing that you need to get done while your house is under contract before you go to closing, this is in the final details here, is to
Excuse me, Vanda.
talk about insurance.
Vanda,
Yes.
what's her contact information? Angela's contact information?
Angela?
Yeah, I meant to send my business card over, and so she can put it on the post, but my phone number is 210-313-9056, and I wish I could pull it up, but I'm not that savvy with Zoom. So
Wait, what is it? I'm gonna type it down here.
okay, 210
210. Oh,
313
uh-huh.
9056.
Okay, everybody got that?
Yes, and she is local.
I am local. I can go all over the state of Texas. So if you got property in San Antonio, guess what? I can inspect that there too.
Oh, okay. Well, thank you.
Thank you.
Karen Burrows with Goosehead Insurance. Tell us why we need to protect our assets and a little bit about yourself.
Thank you, Vanda. Well, with homeowner insurance, that is one of the most costliest things that might happen to your home. You do want to make sure that you're covered correctly when it calls for your new home, your new baby. A lot of customers may skim over coverage or don't know what they're covered for and sign up for something that down the line may bite them in the butt because they thought they had some good coverage, but really was just the bare minimum. So I'm here to always kind of walk the clients through, make sure that they are aware of the coverages. I give my suggestions, let them know the benefits of the coverage, and we typically move forward from there. Above everything, I love to build relationships with my clients. With insurance, rates will increase year after year. So we definitely have discussions every year or before the renewal. And sometimes they may find something cheaper down the line. But at the end of the day, I want to build that relationship with the clients so that they are capable of coming back to me, because I am a broker. I can check the market. I can look from 20 different companies that we cover to see what works best for them. And if nothing works, then that's just part of the game. But I do want to be available every year to check that market for them, to see what works best for them. As well as homeowner insurance, we have a long conversation about flood insurance. Flood is a big topic in Texas. Flood is a conversation I like to have with all of my clients, at least to show them where their home lies in a flood zone, show them what kind of flood coverage they can get, and the premiums for said flood coverage. So I just want to be the agent that kind of covers everything. We talk a little bit about, I think Ms. Webb talked a little bit earlier about life insurance. You know, we have mortgage protection insurance, which is basically a 30-year life insurance policy that can cover the home in case, God forbid, somebody passes before that home is paid off. So you have some money in the bank that can take care of paying off that property, passing it down to your family member, so that now it can become either a home for them to live in or an investment property that they can start to build wealth from. So it's a lot of options for homeowner insurance. I definitely want to be available to help you guys out in any way possible. So yeah, please give me a call, 281. Yeah, that's my office. You can also call my cell, 281-381-2701. You can text me, email me. I'm always available. I love what I do. I love helping clients. I really love building relationships above all.
Thank you. I don't know why I don't have all your information up here. You even had a presentation that I thought I had on here, but technology. I'm
Yeah,
sorry.
it's understandable. It's understandable.
Anybody have any questions for Mr. Burrows?
You know, if you guys, last bit, if you guys are running, looking at homes, you want a quick quote, I have no problem running quotes for you. If you want to check the flood market, I have no problem running flood quotes for you. You know, that's just part of my process. So I love to be available to help you guys in any way, whether you're purchasing or you're just curious. You know, that's part of the game. That's what I'm here for. And
somebody can say, like on a seller's disclosure, no, this home never flooded, and you will be able to look and see that. Well,
that is correct. That is correct. We ran across some situations where clients did not disclose that the home was in a flood claim accident. You could see like the line where they, cut the walls out. Didn't want to disclose it. We had the realtor reach out. I ran a flood quote, and it did come back that there was, indeed a flood claim. So yeah, that's something that we definitely want to look into in each property. Run some flood quotes and run some good homeowner insurance quote options.
And my computer is starting to shake. Are you guys seeing that? But we're almost through. So, okay. It's starting to look blurry for me. Well, thank you, Heron. I appreciate that.
No problem.
So in all of that, you might want to know, well, what does a realtor do? There's actually a document, and I didn't put it here. There's 140 things that a realtor does. In addition to finding properties on the MLS, we can look and see if there's any special comments there. We research the properties. We tell you what other homes are sold for in the area, so you can kind of get an idea if this house is overpriced or not. The seller's disclosure is not public information. Only a realtor can see that in the special documents section. We also draw up your contract. It takes about an hour to do a contract, and that's when you're familiar with it. So if you're kind of new and there's a lot of documents, it could take you maybe 2 hours to do a contract. There's a lot of addendums that go with it. If your house was built before 78, you have to have a lead-based paint disclosure. If it's in a water district, that's a form. If it's an HOA, that's a form. If you're doing financing, that's a form. So this one contract could have 5 or 6 different addendums on it. And then we help you to understand those. We negotiate on your behalf. We may say, well, let's try this, let's try that. We will also have to send you some paperwork to get started. This is called a buyer's rep agreement, which means that I'm loyal to you and you agree to work with me. Any homes that I show you that I get paid a commission for, because that is what we do for a living. We're trying to get paid as well as trying to help you. And then we keep track of all your deadlines so you don't lose your money. You have to submit your earnest money in 3 days. We'll remind you of that. Your option period is 5 days. We remind you of that. Your financing addendum might have a 21-day date on it or 15 days, and the appraisal. There's a lot of different dates that go into this, so we kind of keep track of that so that you don't lose your money. And that's just some of them. So like I said, there's probably 170 more that I didn't name. And I also believe in the power of manifesting. So if you manifest your dream home and you let your realtor know what you want and make a plan to get it, if you got to get your credit in order first, you got to save some money first, start that and start manifesting it. Maybe it won't be 2023, maybe it'll be 2024, but don't just keep putting it off and putting it off, because next thing you know, you'll be 10 years older anyway, and you still won't have a home. So let's just get started on it. And we're here to help you. This is my contact information. Again, I'm a realtor and a lender. And then my Instagram is at the EXP Mentor. I also mentor new agents with EXP. And I have a TikTok account, which is the EXP, supposed to be mentor as well. And I'm with Easy Home Loans. So it can help you with all your transactions. And you guys let me know what else I can help you with. And the last part of this wheel of the home buying is closing. Closing is done at a title company, or it's either done with the mobile notary, so that everything is legal and legit. And you're in your home, you get your keys after you sign your paper, you sign your life away, and you're a homeowner. Any questions? No? Well, we finished about 10 minutes early. So this is being recorded. I will send it out if you want the recording on this, or if you want to contact any one of us. I'll also put that information in the email. All right, thank you guys. Have a good day. Wait, you're on mute. I hear you talking, but I see your mouth moving.
Thank you, Vanda.
Let me unmute her. Okay, you're welcome. Anybody want to go to the car and auto show, call me and let me know. We can meet up.
Amanda.
All right, bye-bye.
I know how to exit out of
Cynthia, you had a question?
I was, yeah, my quick question was that a lot of these programs that you were talking about, were these for first-time home buyers only, or are they for someone? No?
No,
Okay.
not all of them. Mm-mm.
Okay. We'll talk about it as we go along. I got a little road ahead of me, but you know, just gathering the information as I go.
Okay, it's nice to see you, and thanks for coming.
You too. It's excellent. Thanks for the invite.
Okay.
Okay.
Bye-bye.
Have a great day. Bye-bye.